Every day, Americans are told the financial system lives in the stock market. The charts, the tickers, the headlines. But that's not where the system actually breathes. Because the real heartbeat of modern finance is something almost nobody talks about. An overnight cash market where trillions move while you sleep. It's called Repo, short for repurchase agreement. And in September 2019, it almost broke. Interest rates in this boring market suddenly exploded. Banks stopped lending. Cash vanished. And the Federal Reserve rushed in, fast, like it was 2008. Not because they cared about traders, because if repo fails, Wall Street doesn't just crash. It stops. This is financial historian style, where money, power, and history collide. And nothing is ever as simple as it looks. Because the scary truth is this: most of what we call money today isn't paper. It isn't even bank deposits. It's collateral. And repo is the machine that turns collateral into cash. The paradox: trillions overnight, nobody notices. Here's the paradox. Every night, trillions of dollars are borrowed and repaid in the repo market. It's one of the largest markets on earth, and yet most Americans have never heard of it. Why? Because repo isn't designed to be seen. It's plumbing. The stock market is the casino floor. Repo is the electrical grid underneath it. You only notice it when the lights flicker. And in 2019, the lights didn't just flicker. They surged. So what is repo? In simple terms, repo is a pawn shop for U.S. Treasuries. You have something valuable, usually a Treasury bond. You need cash right now. So you sell the Treasury today with an agreement to buy it back tomorrow for slightly more. That tiny difference is the interest rate. That's it. It's a collateralized overnight loan. And it exists for one reason: because modern finance runs on constant short-term funding. Broker-dealers need cash to finance inventory. Banks need cash for balance sheet management. Hedge funds need cash for leveraged trades. Money market funds need safe places to park cash. Repo is where all of them meet. Every day the system says, "Give me cash today." Tomorrow we reverse it. A loop, a rhythm, a heartbeat. Repo didn't become this powerful by accident. It became powerful because finance changed. In the old world, banking was mostly about deposits and loans. But in the modern world, especially after the 1970s, finance shifted towards something else: collateral-based money. As markets grew global, institutions needed a universal, good-enough asset. And nothing fit that role better than U.S. Treasuries. Not because they're glamorous, because they're accepted everywhere. So Treasuries stopped being just government debt. They became the foundation of a massive private money system. Repo was the engine that allowed institutions to treat Treasuries like cash. If you can borrow against safe collateral overnight, you can build enormous leverage until it isn't safe. Now let's open the machine. Treasuries are collateral. Collateral becomes cash. Cash becomes leverage. Treasuries are considered the safest collateral in the world. Dealers are the middlemen. Money market funds are major lenders. It looks safe. Haircuts, the hidden risk dial. In calm times, in panic. Repo stress isn't just about interest rates. It's about confidence in collateral. Rehypothecation, collateral that gets reused. One treasury can support multiple layers. Looks stable, right up until it's not. When everyone demands their collateral at once. Repo sounds safe because it's secured. But secured doesn't mean risk-free. It depends on constant willingness to lend overnight. Funding gap. Repo finances, dealer inventories, bond market liquidity, mortgages, hedge fund trades, treasuries themselves. If repo freezes, treasuries stop trading normally. Everything priced off treasuries becomes unstable. That includes mortgages, corporate bonds, pensions, and yes, stocks. Overnight repo rates suddenly jumped, hard, snapped. Institutions didn't lend. Borrowers bid aggressively. Rates spiked. It was quiet. It happened in the plumbing. But the Fed reacted like the building was on fire. Think of 2019 as a perfect storm of cash leaving the system. Settlements, taxes, post-2008 rules. Even though there was money, it wasn't in the right place, under the right constraints. Repo cares about tonight, because repo is overnight. The Fed stepped in because repo is where rates become reality, spills into everything. The Fed's job isn't just inflation, it's system stability. So the Fed started injecting cash, lender of last resort. It looked technical, but it was a signal. Private money system needed a backstop again. It was a warning shot. Even in good times, the system could still seize. Repo stress doesn't stay on Wall Street. Baseline pricing spills into higher costs, tighter credit, worse liquidity, higher mortgage rates, higher corporate borrowing costs, more volatility. Repo stress threatens the Treasury market itself. If the safest asset becomes hard to finance, too central to fail. Repo is central. So when it breaks, the Fed acts. When repo breaks, the first response isn't aimed at wages or rent, it's aimed at collateral. Institutions closest to repo, dealers, money funds, large banks, holding the keys. In crisis, the rescue pipeline flows toward Treasury market, dealer funding, institutional liquidity. Meanwhile, the costs flow toward everyone else: layoffs, higher rates, reduced lending, taxpayers. This is how modern capitalism prioritizes stability. First, secure the collateral engine. Then, deal with society. System protects markets faster than it protects people. Not out of malice, out of design. Everyone thinks the stock market is where the system lives. It's not. The system lives in the plumbing. Overnight market where collateral becomes cash. Repo is the altar of modern finance. Depends on faith treasuries convert into money. And in 2019, that faith wavered, just for a moment. Modern finance doesn't run on savings. It runs on collateral confidence. And repo is the ritual that keeps it alive, every night. If this changed how you see money, subscribe. History has the answers. I'll show you where to look.